Powell insists while it's not time to raise rates, tapering remains, quote, on track. Okay, on track means same timetable, meaning it'll start November, December. Okay. He'll resist altering his plan even as the facts are changing quickly. Folks, the market, this is my little commentary here, the market is a voting machine, and it is voting on the prospect that soon Jay Powell and company will be forced to shift its tapering into high gear, making it happen more quickly to draw down those stimulative plans. Our floor show traders, let's see what they think. Thomas Hayes, Scott Shellady. Let's get to it, Scott. This time, his old standby of it's premature, it's not time to raise interest rates did not provide air cover. I mean, the S&P had been higher by 9 points. The NASDAQ had been down 22. It's down 131. The market knows it's absurd, Scott, doesn't it? That we're slathering suntan oil in the form of $120 billion in monthly stimulus on this inflation-burned economy. So do you still subscribe to the don't fight the Fed theory, or are you getting ahead of the inevitable?
I subscribe to the fact he's going to have a hard time sticking to his plan. But first off, this is going to be his Afghanistan, right? We all know we got to get out. It's just how he gets out. That's going to be the key. But number two is that, you know what? He's stuck in a corner. If he raises rates, he's going to kill an economy, which I would argue is already suffering. If he doesn't raise rates, he's going to let inflation kill the consumer. What does he do? I'll argue this. I think he might start tapering in November, but he takes a lot longer and does less and drags his feet because
that's the worst thing to do, is it not?
The worst thing to do was to get involved with it in 2008. Again, now hits his Afghanistan. We all know he needs to leave, but you know what? We've got an economy here that is struggling. Look, we have inflation that's killing the consumer. Look, gasoline prices in Gorda, California yesterday, $7.59 for a gallon of unlimited regular, right? It was over $8 for premium. Look, it's up 40% across the country. Food and energy, not including fuel, is up over 10%. We're in trouble. And now we have two non-farm jobs numbers that were absolutely horrible. And we had 4.3 million people walk off jobs in August, and I don't know how many thousands are quitting because of the mandates. You want to tell me, this is the first time in my 34 years I've seen the Fed actually think about raising rates or let bonds trade lower, rates trade higher, into the teeth of an economy that I say is weakening. Never heard of it before.
Okay, but in that case, Tom Hayes, if we at least start to move more quickly to get rid of this slathering oil, right? The suntan oil on the burned economy, that's the analogy I'm making. Then you bring down inflation, consumers calm down a bit. Yes, you start to raise rates, but okay, big deal. We're at emergency levels and we're not in an emergency anymore.
Yeah, you hit the nail on the head, Liz. And Chair Powell said last month he needs to see a decent jobs report before he moves ahead. He's not going to get that before the November meeting. He's probably going to get two decent jobs reports before the December meeting. The market's already pricing that in. We've seen 10-year yields move from 130 bips to 170 bips almost in the last month. We think we're going to see a two-handle.
1.7% briefly today. I mean, it retreated a bit, but that's giving people heart palpitations.
That's exactly it. And we think it's going to go to 2% before the taper actually starts. The market is pricing in this move that's coming in December or in January. And what we're seeing is all the managers, the Bank of America Global Fund Manager Survey this week, they're all on one side of the boat. They're short bonds. And what we saw in the 2013 to 2014 taper is in the announcement, moving into taper, yields moved from 162 basis points to 3%. They actually peaked when they started tapering. Everyone thinks yields are going to go higher when they start tapering. That's when they peaked for 5 years. So while everyone is short bonds, I think when taper starts, whether it's December or January, that could be the time to buy bonds, Liz.
Okay. Scott, Mary Daly of the San Francisco Fed put it a little more bluntly about inflation. She didn't tiptoe around the tulips there as you know, Fed Chair Jay Powell did. She called it eye-poppingly high. Inflation readings, some of them are eye-poppingly high. And so I'm looking at this and I'm thinking, they're off the mark here. This is a problem.
Well, she's saying that they're eye-poppingly high, the inflation numbers. At the same time, you got the Atlanta Fed downgrading their GDP from 2 or 3 months ago at 6% to 0.5%. Okay, so you've got a slowing economy with rising inflation. what's Jay Powell going to do? He's in trouble. A third of all the goods from China are hung up in ports outside of the U.S. West Coast. That's the problem. Now, we've all said our say here right now. Let's pour in $6 trillion in spending from the government on top of that. What do you got?
Well,
it's not looking good.
Speaking of which, we're getting right to that right now. Scott, Tom, lively discussion. And as I said, speaking of which, let's get to the spending bill and where we stand right now. Let's go straight live to Chad